Inox India, it lists at a whopping 40% premium in comparison to its IPO price. To discuss the listing, plans for the business going ahead as well, we're joined by Mr. Siddharth Jain, who's the promoter and non-executive director of the company. Hi, Siddharth. First of all, congratulations on a solid listing. The business looked quite interesting when you joined us in the studio itself. And it appears it's caught the eye of the stock market. You had explained to us that you believe that fundamentals have improved drastically, and that's why you all were doing this IPO at a sharp premium in comparison to some of the share prices in the last couple of years. Now, importantly will be what you do from here on. So let's get straight to the numbers. Last year, you did around 965 crores of revenues, margins in the mid-20s. For this year, what kind of revenue number can you do? FY24, FY25, you've added some capacities as well. And what about the margin outlook from here?
So good morning, Nigel, and good morning to all your viewers. Thank you so much for having me on your show. Today is such a great emotional day for our company. Inox India, started by my father, Mr. P.K. Jain, 30 years ago. It's a coming of age for us. This listing has been in the offing for a while. And, full credit to our entire management team. This listing premium, the love that has been showed by all the investors is a testament to the quality of the management and, the products that we make. So we are, full of emotion today. And thank you for having me in your studio last week. I had the opportunity to explain our company, what we do. Cryogenics isn't a subject that is very well understood by everyone. But,
yes.
Hopefully now with this listing, one of the things we wanted to gain was visibility. And, with over 42 lakh applications for our IPO, overnight...
Siddharth, when you joined us in the studio, you perfectly explained the business to us. We've seen the kind of interest in this IPO as well. So most of those details are out of the way. We want to look at the way ahead now. So give us those numbers, right? What is the guidance for 24? What's the guidance for 25? What is the margin outlook? Let's go for it.
So, we did in the first 6 months of this year, 580 crores in top line with a healthy 25% EBITDA margin at about 145 crores with a 103 crore PAT. We hope to continue that same momentum for the rest of the year. In the past 3 years, we've grown at a CAGR of 27% and little over 20% for the past 7 years. And, we certainly hope to continue that trend going forward as well. I think we have a very healthy order book of over 1,036 crores. And, the three verticals in which we perform, which is industrial gases, LNG, cryoscientific, we are seeing great traction in all three of them from different parts of the world.
So just going by the numbers that you're speaking about, this year we can expect you to do close to around 1,100 to 1,200 crores on the top line because this run rate continues. And you've spoken about the 27% CAGR that you've been doing. That implies that you would reach 1,600 crores by the next financial year and closer to 1,800 to 2,000 crores by the year after that. Would that be a reasonable assessment?
Well, I would take more of a 7-year rolling average that we have been doing in the past of over 20%. And we endeavor to beat all those numbers, in fact, with the way things are going in the clean energy space with LNG and hydrogen. So, in our business as a capital goods business, as the CapEx cycle and investment in new energies continue, I'm sure, why not? We can do that and even more.
Would you have the capacity to do so? Because now you have 3 plants. I remember you saying that, you've invested 80 crores in the 4th plant itself. With the current capacity that you have, what is the peak revenue that you can achieve? And by when do you run out of capacity and get to do more capacity expansion?
So 80 crores is what we invested in H1 of this year, and that was part of our phase 1 expansion. We purchased a 31-acre piece of land. That was only phase 1 of our investment. And traditionally in our business, we've done a turnover of 4 times of our gross investment. Our investment isn't complete. That's going to continue. And we hope to see revenue from this new plant in the second half of calendar year 24. And as I'd mentioned to you in the studio, in that piece of land, we have potential to do a phase 2, phase 3, phase 4. And, there's no dearth of capital. So as the market does develop to achieve any of those top line numbers, we'll certainly be able to do that. And, in addition, our divisions such as the cryoscientific division or the solutions that we provide in LNG, the value addition there is far greater compared to the core industrial gases. So you don't necessarily need a large investment to gain turnover there.
Okay, this remaining phase, I think 2, 3, 4 that you're looking at, by when do you take a call on that, and what kind of money will you be putting in? Because we've already got the asset turn 3 to 4 times, as you've said. So tell us when do you take a decision about the capacity enhancement?
So as soon as we load this plant, which, we always invest ahead of schedule. So as we see this plant get loaded in the next, hopefully, year or 2 years by calendar year 25, we're taking a decision to invest additional capital, is pretty quick for us.
All right, Siddharth, the Inox Group has given the stock markets a fair amount of listed entities in the past. You also have a lot of unlisted businesses. I remember the Inox Air business as well. Would you consider listing it separately at some point in the near future, or would you look at a reverse merger, give your Inox India investors the opportunity to participate in bigger businesses, or maybe, this is for the next bull run perhaps?
It's all a function of the need of the company, and Inox Air Products is a totally separate entity. It's a 50-50 joint venture of Air Products of the US and ourselves. We are private, of course. We're India's largest industrial gas company. It's growing at a very healthy pace, and we certainly hope to list that at some point. Looking at the love and affection we've received from retail investors all over India, more than 42 lakh of them, we are absolutely humbled with the faith that they reposed on our brand name, our group, and we hope to share those gains with them in the other entities as well.
And reverse merger is an option?
They're two separate entities. They're completely independent, different shareholding. There's no reverse merger, and they're two different business models totally.
Siddharth, we like to clear the air for our viewers. Viewers are happy. Investors who got the shares will be happy. So we like to clear out all the aspects. But congratulations on this listing, and thanks so much for joining in. Enjoy the day. We look forward to chatting up with you at the end of the quarter, because then we'll get a better sense in terms of the numbers going ahead. A big listing, 45% listing gains, for the time being holding with a gain of around 35% odd. Well, time to shift focus to our special